Hello and welcome to another update video about gold. Only a quick update here. In the last video we talked about this upcoming dip for two reasons. So first of all, anyway, I mean, we are still in a potentially bullish scenario, but of course we have retraced quite a lot. And if we leave this green area to the downside, which would be a move below 1695, 1696, we can be very certain that we're also going to go below 1679 and then make lower lows, and could even come down to, well, a maximum of 1606 in the current scenario. If we go even below 1606 or 1605, then we could even see a three-digit gold price. That would be a massive, very bearish sell-off. I do not see that, at least not yet, at least not this year. This would still be on the radar for maybe the years to come, because I envision a larger correction for gold at a later stage if it doesn't happen now. And that is just purely because if we have, I currently count this here, this current correction as a wave 4, we would be looking at a wave 5 afterwards in my primary expectation, and then look at a large correction in which this entire wave count will be corrected. That could then take us eventually below $1,000, but this is not going to happen this year, at least not in my primary expectation. Yeah. At the moment the question is, have we already seen the reversal? The gold price is a bit different than the silver price chart in that silver has made a lower low, gold hasn't. Yeah, that means gold has a chance still to be in the bullish scenario, and also has a chance that the low was in here on the 21st of July. So after we came up in a 5-wave move, we expected this dip. I talked about this dip being the stress test for the bullish scenario. Of course, we can still make lower lows, but yeah, basically we're currently maxing out really what we can do. Yeah. Few things to mention. In the last video, we talked about this upcoming dip because we were in an ascending wedge pattern. That means in Elliott wave language either that we are in a leading diagonal, so that a low was in here, a higher low than this one, which would be bullish, so a leading diagonal, or that this was just a corrective wave up and we are moving down in an impulse. So what do we need to watch out for? In my opinion, a very important level to hold is, well, basically that 78.6% fib level at 1709. Any move below this level will just make it unreliable that we are still in some kind of a bullish pattern here, and would lead to a new low. Okay, so ideally we hold above 1709. Any drop below that will massively increase the risk that we are heading down lower. Yeah. So at the moment things are still pretty much in, yeah, I would say in question here. This is a very impulsive move down, so we need to be ready. We could see lower lows in the current scenario. We could still go down to 1696. A move below that will make this current correction as a wave 2 unreliable, and we have to expect lower lows, and I gave you the key levels for that. So for me at the moment here is a waiting game. Of course you could speculate for higher prices from here, but it's just not reliable at the moment. This was not a clear impulse. This was at best a leading diagonal, and the move down is very impulsive. So I would personally actually say we are going to see another low, but it doesn't really matter what I say or see. Yeah. It matters what the market does and how we react to it. What is important to say, and that would maybe be a bit of a bullish signal, is that we have a descending trend line here. We broke above it and we're now retesting it. Okay, successfully so far. And at the moment we are still holding above this level. So, you know, you could be carefully bullish as long as we stay above 1696. Yeah, definitely. And here in the short term, we should stay above 1709. Okay, so these are the key levels to watch out for. And if we then in the next move break above the previous highs at 1746, that would be bullish. Yeah. And if we move above this high at 1779, that would be a very bullish signal. And of course, you know, the breakout would then eventually happen above 1823. So these are the key levels to watch out for at the moment. Here at the moment, no reliable signal that we are going up. All we have here again at best is a leading diagonal in a wave 1. This would be a wave 2, and the wave 3 would be following and should take us above these highs. So this is currently my view about gold. So again, probabilities very close together here, a very uncertain environment at the moment. And yeah, again, the next main level for me is this 1779 level, because it is a very, very relevant swing high in the structure. And a move above that would indicate that we are, yeah, flipping bullish, you could say. Yeah, definitely a good signal. Not only because of that, but also we could then potentially really count this as a 1 and a 2, and we would get very close to the 1.618 extension, which would be an ideal target for a wave 3. So yeah, by all means, we could consider that then quite bullish. But at the moment, I'd be sitting here on the sidelines and just watch until we get a clearer picture. Of course, this can be traded. You know, we've come back to support, but it is a very uncertain environment. Everybody needs to understand that. And we definitely cannot rule out new lows here. Very important though is long term or medium term, we should not drop below the 1605 level down here. Okay, and that's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out my main channel, More Crypto Online. Thanks a lot for watching. Bye bye.